Hello everybody, Tim Knight here, and we are going to do 3 videos this weekend. This one is going to be a look at 16 major United States indices, and it's free for everyone. And the second one I'm going to do is going to be the 43 ETFs I follow, and that's going to be for all paying members, bronze, silver, gold, and platinum. And the third video is going to be a review of my positions, and that's just for gold and platinum, the classic slope plus crowd. And so this one's for everybody. And we've just completed a very exciting week, and we're into a obviously very interesting year so far. And I thought it'd be a very opportune time to review, especially since we have a huge week ahead. A Fed meeting on Wednesday and the biggest earnings week of the entire quarter. So this is going to be a real, added to which, the complete backlash from whatever craziness we just came out of. So lots of stuff happening. So let's get started. We're going to go in alphabetical order, and I'll spend more time on some of these than others. This is the Dow Jones Composite. This goes all the way back to the 70s. And what we've got recently is this zaniness. You can see the extraordinarily sharp ascent here, driven by the Federal Reserve's trillions of dollars of money thrown at the market. And if that ends, the market is completely hosed because the market is astronomically overvalued. Now, it is utterly plausible that there's a vicious rally next week. Could happen, or it could crash, But here's my total shot in the dark hunch. And in recent weeks, my hunches have been completely correct, so I'm really going out on a limb here because I don't want to look like an idiot. But here's my dumb guess. To get some kind of rally going into the Fed meeting, and then resume more violently the downdraft. So that's one prospect, because we have come very far, very fast. I mean, just look at the Dow Jones Composite. It basically hasn't caught a breath almost for the whole year. I mean, it's incredible. Look at this is the year right here. Yes, we got a couple of days of bullishness bleeding over from the Santa Claus rally, but that was it. It's been virtually nonstop downhill ever since, just getting faster and faster and faster, closing right near the lows. Now, what we want to watch out for is something like this that happened back in Thanksgiving, where it was falling. It's all exciting. Yay, we're finally getting a bear market. And then wow, just this explosive move higher to new lifetime highs. As it is now, what's helping the bear case, though, is, look at this. You've got a failure of this lower line. Before, we were banging around these two lines. You see? Bang, 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 bang. And finally, and it sort of teased us here, did some damage on the 14th to this line, but it was correct because it just went shattering through, and the whole week was a down week. Every single day was a red bar, and we have blown right past this trend line. So the risk here to those in position, and I'm among you, is a violent rally back to the trend line and then a resumption of the failure. Could happen. But, as I say over and over again, that's why my positions are long dated options, and as much of a drag, and it's a huge drag, it is to bear through those lifts. I'm not sweating it out with like, I've got 1 day left to expiration kind of thing. The Nasdaq Composite is a little bit of a tougher read in a way. It failed earlier. This guy topped out way back on November 22, and it failed its channel on the 6th of January. And it has pretty much crashed since the 12th, as you can see, just pretty much straight down. It's getting pretty close to a trend line here that should provide some bounce to it. This trend line, the red one, has been in place for decades. And we're falling hard and fast, and we're getting close to it. So I think the easy part of this particular fall is behind us, I'm sorry to say. Yeah, I'm very sorry to say that, actually. I said I'd be spending more time on some than others. This is one I was spending no time on. There's really nothing much to say about the gold bugs index, so we'll move right on. Here's the Dow Jones Industrial. In this instance, we have fallen from almost 37,000 to almost 34,000, so a nearly 3,000 point drop. Now, here's another argument for a bounce on Monday. I don't even have to draw the trend line manually. I can just do an automatic one like so, and we'll unextend that. And in fact, let's be a little more, I'm actually going to do a little manual business here, something like that. So you can see that ever since an entire year ago, we've gone boing, 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 and we've had a series of higher highs and higher lows. And so this, and listen, I'm recording this and thinking about my own positions. This kind of scares me because this might suggest an incredibly strong rally right from the opening bell on Monday, you know, after a very, very green Globex session on Sunday. Absolutely could happen. So yeah, we close right near the lows. The other alternate, by the way, would be, and this is just as powerful, if we just resume the fall, if we're red on Sunday and just open weak on Monday, it could be a whole new ball game because this trend line could fail right here. So I'm not, I'm always making fun of people who say like, it could go up or it could go down, but you can say that with some explanation. So I'll say it again with some explanation. We could go up. In fact, not even that. If we are strong at all, I think we will go up, because the stage is set for a rally here. But if we fail this trend line, it just opens up the trap door here to a much bigger fall. So yeah, we could go up or down, but it's very simple to figure out what's most likely to happen. Just look what happens at the open on Monday. We are right at that decision point right now. Very interesting. The Index, the 100, not terribly interesting here. It shows how badly sold off it is. It shows the prospect for another big bounce. It's great that these trend lines are broken. It sets us up for massive trading opportunities on a swing trade type basis. But the grueling thing about this, which is why I left literally like 6 figures on the table recently, is because it's scary, and you don't necessarily want to hang on. The cold fact of the matter is, if I had never closed a single position ever, irrespective of what the charts were doing over the past 3 weeks, I would have vastly more profits than I do right now. But sorry, I just, after 13 years of disappointments and shocks and surprises, I'm not really inclined to just see what happens, So I didn't. Here's the S&P 100. And kind of the same story. We had a failure, it fell hard and fast, and we're getting close to support here. Now, probably the most interesting of them all, the Russell 2000. In this instance, we were following this line so closely because we had been trapped for almost a full year here. And the moment we slipped below, then things started getting greasy real quick. You can see even at this great distance, when that support failed, it was wah! Now, at the risk of being insanely repetitious, once again, in a perverse way, the greatest thing that could happen for the bears would be a big stinking rally to get everybody all excited and breathing sighs of relief and buying GameStop and buying AMC and slapping each other on the back and buying Roblox and have this thing just go ripping higher and go punk right there to the trend line and stop. Should it do that, it could be the greatest shorting opportunity of the past decade. So let's keep an eye on that. As I say, in a freakish, perverted way, if we just keep falling, it's kind of a bummer for the bears, because it's just, the opportunity to get back in or get it in heavier goes away. You just sort of have to like cross your fingers. The Semiconductor Index, here's another reason we could be in for a bounce. The more I look at these, the more I think we're going to bounce, got to tell you. Look at this. Look how dramatically this has fallen, but look where it's getting to the trend line here. So another alternate for Monday would be a few minutes of really hard, furious selling, and then a massive rally starts in. And that could actually be the very best of all worlds, because for those of us in position, we could get the hell out and then sit back and wait for better prices. The S&P 500. This one, I've got much more long-term objects drawn on it, so you can see we're still sky high. Short-term, we have breached this support hard, and forgive me, I'll just say it again, a rally to this level would be the ideal bearish scenario. This video is getting really long. Hang on a second. Okay, so here's the Dow Transports. Kind of boring. I don't really trade this stuff, but once again, we have failed support on this one. So it's all very constructive to the bearish case. Utilities, completely boring. Goodbye. VIX, we have rallied in short order from, sorry for the persistent bings, I'm a very popular fellow here. Anyway, from the 12th, we went from 17 on the VIX all the way up to almost 30. So just about doubling it in a few days. So that's rocking and rolling. And I do think that we've experienced a fundamental change in volatility, because you can see here that we are getting a consistent series of higher lows. In fact, this one, the last bottom on Jan 4, didn't even manage to fall down to the trend line. It's up here. So volatility is heating up. Boring, pretty boring, really boring. Last one, XOI. You'd think I would find fascinating because I'm really into energy. This particular index kind of broke my heart when it passed this level here. It should have stopped at this line, but it didn't. And so I think as a chartist, my idea here is that it'll probably find support back at this level. So I'll be watching my energy shorts very closely for that to transpire. Okay, I try to keep this to 10 minutes, but we're coming up on 13, so I'll say thank you. And for everybody who's paying members, you got more videos to come.